Now joining us is New York Department of Financial Services Superintendent Adrienne Harris.
Adrienne Harris.
Thank you for joining us, Superintendent.
With me today is our Department of Financial Services Superintendent Adrienne Harris.
Please welcome to the stage Superintendent Adrienne Harris.
Thank you for having me. It's good to be here. Well, right now in the United States, there aren't really any rules of the road for crypto or stablecoin outside of New York and what we've done at DFS in the past 4 years. We oversee about 3,000 financial institutions, state-chartered banks and credit unions, including about 120 foreign institutions, 15 GSIBs. We oversee insurance across P&C, life, and health. And then, of course, we are really the only prudential regulator for now in the country, state or federal, of cryptocurrency and digital assets. I think this is always the tricky thing for a regulator or a policymaker more generally when you're talking about new technology is you don't want to front run and stifle what could otherwise be productive and responsible innovation. But often what happens is you have the opposite, which is the policymakers lag so much that the norms that set in are harmful ones, or a lot of consumer harm happens, or something detrimental to the system happens. And it's a hard balance, I think, to strike of how do you stay close in time to the innovation without front-running them in a way that's counterproductive? We've had a whole host of wonderful accomplishments from this year, but specific to crypto and blockchain, we've issued our 9th piece of guidance, this one about customer service expectations. And as was mentioned, we've really spent a lot of time growing the team from a real skeleton crew to what is now the largest crypto regulatory unit anywhere in the world at over 60 people.
We just launched the Transatlantic Regulatory Exchange with the Bank of England, which is a secondment program of senior staff around payments technology and cryptocurrency and stablecoins. So we really do work quite a lot. And often what we hear from our foreign counterparts is they really think of New York as their counterpart, especially around innovative technologies. We said no overdraft fees over $20, no overdraft fees larger than the purchase itself. You can't charge more than 3 overdraft or NSF fees in a day. You can't charge an overdraft fee for an electronic transaction that was instantly declined, right? We really tried to be specific and look at all the ways overdraft fees and non-sufficient fund fees get charged.
I'm the first person of color in my seat. So I really bring, when I think about issues around discrimination, bias, fair lending, for me it really is personal. And I think about my family. I think about my mother who grew up in the housing projects in the Bronx. I think about my father who grew up in segregated Baltimore, and some of the things that they face. I think about my family. They say, like, how do we really make sure that when we are making policy, when we are writing rules, when we're bringing enforcement actions, that we're doing so with those people in mind. So much of our job is about protecting the marketplace and protecting the safety and soundness of institutions and making New York a great place to do business, which I think it is. But we also have to keep in mind, right, the end consumers.
Yeah, so I'm a firm believer, right, that you can protect consumers and markets and be good for business at the same time. I think, in Washington, you sort of get one or the other. In New York, it's the financial capital. We have to be able to do both. And what we've learned is having transparent, albeit rigorous, rules on the books helps drive growth, which is why the demand for the BIT license, the demand for the limited purpose trust charter just continues to grow and grow and grow. But it requires lots of engagement with all of our stakeholders, including industry, to make sure that we're balanced. But we don't see the race to the bottom. We don't see, I know the BIT license, when it was first put into place, drove some companies out of the state, but as we've matured it, as we've added guidance, as we've built the team, the opposite has really been true.
The problems created by the slow payment system, if you get paid on the 1st and your bills are due on the 1st, but you can't get your money for 2-3 days later, that's a problem. And of course, people are then going to go to check cashers or payday lenders to get that liquidity. So while it's important that people have bank accounts, I think as policymakers, we have to realize that's not the be all end all, right? Providing people with the liquidity they need is important. At the same time, these services that provide liquidity are very often predatory.
These public policy objectives are not mutually exclusive. In fact, they're mutually reinforcing. In fact, we have an economic development mandate at DFS, much like the UK regulators now have their secondary mandate around competition We have always had that at DFS.
We've done so much to operationalize the regs since it was first put in place 10 years ago. So now the staff is over 60 people devoted to virtual assets and digital currency day in and day out. We have far more regulated entities. We've done in my time 9 pieces of guidance around blockchain analytics, around stablecoin market manipulation. So we've really added quite a lot of meat on the bone so that there's transparency and clarity to help innovation thrive in New York.
We are very keen to make sure that there is a federal regulator, a federal cop on the beat in the virtual asset space, because we've seen the risks and the dangers that that space presents. But we in New York have been leading in this space for a long time. The regulations were in place when I came into office, but now we've built a team of over 60 professionals devoted to this day in and day out. We've issued 9 pieces of guidance. We oversaw the unwinding of BUSD. So we're really leading here, and it'd be such a shame to lose that expertise and that experience. So just like we do on the banking side, we're eager to see parallel regulation between federal and state regulators, and that's reflected in some of the bills we've seen moving in Washington. I'm hopeful that they'll get done.
But this is an area, an industry that purports to provide discounts on prescription drugs to consumers, but when you really dig in, you find that there's a lot of rent seeking that happens there. And of course, prescription drugs are one of the fastest increasing costs in healthcare, and they're one of the biggest contributors to increasing costs of healthcare. So if we can get at these middlemen, regulate them, oversee them, provide transparency to consumers, that helps bring down the price of prescription drugs, helps bring down the price of healthcare, right? That's important to do.
Well, I think it's an important question. You don't want to front-run innovation, but you want to be close in time to make sure those guardrails are there to protect consumers and markets. It really is one of the virtues of being a state regulator, especially in the financial capital, where we've got tech, we've got the financial services industry, so that feedback loop is tighter and faster.
For us in New York, we really pride ourselves on calling balls and strikes, right, for the baseball fans, for being data-based, for being evidence-based, and proving out the thesis that you can protect consumers and markets and be good for business.